Hello dear students. So today I am going to discuss regarding this one, introduction of accountancy for PUC first year. So it is about the brief introduction of accountancy and it is the basic step for accountancy. So dear students, that is the reason I am standing before the camera along with my camera technician Mr. Shivraj. Let us see that we have already studied in the previous video about the golden rule for debit and credit under English system. Or you can say it is the traditional system or initial system, or this is the olden day system. Golden rules for debiting and crediting under English system. In the last video we have discussed, we have seen that every business transaction has its own twofold aspects. So one is for debiting and another one is for crediting for under this one under double entry principles. So that is the reason we need to debit one aspect and another one is we need to credit another aspect. So as per this one English system, under this one English system we have studied in the last video the rules for debiting and crediting. So I have discussed in the tabular form. This is very important rule. So this is a basic step for the term debit and credit under this one English system. As I said earlier, every business transaction has its twofold aspects. So twofold aspects with regards to double entry principles. Double entry since in the sense while conducting every business activity there must be twofold aspects. Say for example, one is the receiver, another one is the giver. So with regards to this one things, one thing comes in and another thing goes out. Another thing goes out. So as for this one, lastly, that is the nominal aspect. So whether it may be expenses or losses, or it may be incomes or gains. So like this, there will be a twofold aspects for every transaction. So for those aspects, so we need to say the debit for one aspect, another one we need to say the credit. So under English system, dear students, very important the rule it is under personal account. Under personal account we can see the persons, group of persons, right? So under personal account, so we can see the physical persons, we can see the legal persons, we can see the representative persons as we have discussed in the previous videos. So personal, in the term of personal accounts, the one person is the receiver, another person is the giver. So as for this English system, debit the receiver, this is the rule under English system. So debit the receiver, the person who receives. So he is called the receiver, whom that we need to say the debit. So credit the giver, debit the receiver, credit the giver. So this is about personal account. So the second one under real account, debit, real account means real things account. Under real account, so only things are come under this real account. So what are the activities of things? If you purchased the thing, or you can say if you purchased one book is the thing here. So if you purchase that book, the book comes in. So if you sold that book, it goes out. So its activities like this. So when it comes in, we need to debit it as per this English system. So the rule of English system says about the debit what comes in under real account, credit what goes out. If you have purchased one book by paying rupees 100, so book comes in, cash goes out. Book comes in, cash goes out. Book comes in means debit the book account, credit the cash account. Similarly, so that is the reason under real account, debit what comes in, credit what goes out. This is the lastly the nominal account, debit expenses or losses, credit incomes or gains. So expenses or losses, expenses, so that we are going to incur certain expenses for conducting every organization or for conducting every business. We need to spend some money. So we don't know how much it needs to incur at the initial stage. After incurring the amount, after making charge, so then only we can say this much money we have spent in an organization for conducting the business activities. So that is the reason it comes under nominal account. The term loss is also after it's occurring only we can say this much loss has occurred for this year. So at the initial stage, at the beginning stage only we cannot say this much loss will be has occurred right now. So that is the reason these two terms come under the nominal account. Similarly, incomes or gains or profits. So these are all the resultant figures. So we cannot say result will be at the admission stage. So we can say about the result at the conclusion stage. So that is the reason these aspects come under the term nominal account. As per the English system, debit, expenses or losses, by nature both are same. Debit, expenses or losses, credit, incomes or gains under nominal account. This is a very important golden rule for debiting and crediting under English system. The present rule for debit and credit under American system, dear students, the present rule for debiting and crediting, it is the American system, but it depends on this English system. That is the reason before going to teach about the American system, here I am very much interested. Here I am very much interested to teach this rule about the English system. Under American system, dear students, accounts are classified like this, like assets account, liabilities account, capital account, this one expenses or losses account, the lastly incomes or revenues account. Like this they have classified the accounts in 5 manner. Under English system we have seen only 3: personal, real, nominal. Under American system, assets, liabilities, capital, expenses or losses, incomes or gains. Dear students, assets are the properties of the organizations. Assets are the properties or wealth of the organizations. Liabilities are the responsibilities or obligations of the or you can say the O's of the organization. This one, the term, capital. As we have discussed in the previous video, the term capital is amount invested by the owner in an organization for starting the business. So these two terms that you have already seen in nominal accounts, the expenses or losses, incomes or revenues. Like this, they have classified the accounts in the 5 aspects. The rule for debiting and crediting under American system. So among these two systems, you can follow at any one, but the present rule is American system. Both are similar, but slight. By observing, you can see it is something quite different from one another, but that is not like that. So, dear students, for these assets, increase in asset debit as per the American system. Increase in asset in an organization, day by day, the improving of organization depends on the increasing of properties, increasing of assets. So like this, so increase in assets debit, decrease in asset credit. This is a rule of debit and credit under American system. For with regards to this one, assets. Then the next one is liabilities. As I said earlier, liabilities are the responsibilities or obligations of an organization. Liabilities, just opposite of assets. Assets are own properties, liabilities are oaths or obligations to the other parties. So this is just opposite version of asset. Liabilities are just opposite of assets. Then when to debit the liabilities, decrease in liabilities, decrease in liabilities, debit, increase in liabilities, increase in liabilities, credit. It does mean that, dear students, please concentrate. Decreasing liabilities means decreasing the responsibilities, minimizing responsibilities means minimizing liabilities means maximizing the properties. So that is the reason this is the vice versa, or it is just opposite of these two. That is the reason. Decreasing liabilities, the debit, increasing liabilities, credit. Then the third aspect, that is the term capital. Capital, as I said, as we have seen in the earlier video, dear students, the amount invested by the owner in an organization for its commencement. The amount invested by the owner in the sense that is also the obligation, that is also the liability, that is also the responsibility of the organization. It does mean that it is just similar the liability. Capital is the just similar for the liability. Both are obligations, both are responsibilities for the organization. That is the reason decrease in capital, debit, increase in capital, increase in capital, credit, increase in capital, credit. Okay, so let us see once again about these 3 points. Later on we will discuss regarding all these rest of the 2 points. The one is asset. Increasing asset. Asset means the properties, wealth of the organization. Increase, if you go on increasing the properties, debit, decrease in assets, credit. Assets and liabilities, just opposite of these two opposite words. Asset it is the liability. Assets are own properties, the liabilities are owes to other persons, other parties. Liabilities represent, it is our responsibility, it is our obligations to making the payment of other third party. The liabilities, decrease in liability, debit, increase in liability, credit. The capital, as I said, the amount invested by the owner in an organization for its commencement. So that is also the responsibility, that is also the obligation to the organization for making the payment in the future days to the owner. So the capital is also just similar to the liability. That is the reason decreasing capital. Decreasing capital means decreasing the responsibilities of the organization is debit. Increasing capital, it is credit. So about these two that you have already seen in the this one under nominal account under the English system. Let us see once again. Expenses or losses, increase in expenses or losses, debit, decrease in expenses or losses, credit. So just opposite, expenses and incomes are both are the opposite words. So the rules are also the opposite. The incomes, decrease in incomes, debit, increase in income, credit. Like this, the rules for debiting and crediting under American system. So both are quite similar. Later on you will come to know it is the initial stage, dear students. Don't get confusion regarding this one, the rules for debiting and crediting under English system, under American system. Choice is left to you, but present system it is American system, dear students. So it is also very easy asset, increase in asset, debit, decrease in asset, credit. Look here, increase in liability, sorry, decrease in liability, debit, increase in liability, credit, capital, decrease in capital, debit, increase in capital, credit, expenses or losses, increase in expenses or losses, debit, decrease in expenses or losses, credit. Lastly, incomes or revenues, decrease in incomes, it represents debit. So increase in this one incomes or revenues, that is a credit. So dear students, among these two, which one is very easier for you people, you need to follow, but the present rule is American system. But I'll discuss later on while discussing the every transactions for giving the examples of debit and credit. I'll discuss both the system. By applying both the system, I would like to classify the every transactions. Okay, dear students, let us see the examples for debiting, for debit and credit. And initially, I'm going to examine or giving. I'm very much interested to give the examples for debit and credit under English system. Later on, you will see about this one under American system. So initially, so I'm very much interested to for providing debit and credit under English system. Okay. Examples for debit and credit under English system. So let us see one example. The first one is commenced a business with the rupees 1 lakh. What does it mean? Commenced business with rupees 1 lakh. It does mean that started business with rupees 1 lakh. So, or you can say the owner has started his business by investing rupees 1 lakh. In this business transaction, this is one business transaction. Commenced the business with rupees 1 lakh. Means, so here we have started the business by investing rupees 1 lakh. The owner has invested the money. As I said earlier, we are just an accountant of the organization. So we are just an accountant of the business. So as we have discussed, the business, this is the business, he is the owner, we are an accountant. Here owner invests the money into the business. Here the owner invests into the business for its commencement. We people are an accountant of this business. Here the business, accountant and the owner. These three are the classified aspects of the persons. So owner is the physical person. Business is the legal person. Or you can say it is an artificial person. Owner, physical person. So business is an artificial person or a legal person. Here we people are the representative persons of an organization. Here we represent about this business. Here we provide the services to the business. Here we do work on behalf of the business, but not on the behalf of the owner. So as we have discussed in the last few videos. Keep in mind while solving these examples, we are just an accountant of the business. We are not the business. Sorry, we are not the owner. We are the business. Here we are the representative persons of the business. So owner is quite different from the business. Look at, by observing this transaction, by observing this business transaction, we can classify two aspects. The one is cash. Another one is capital. With this, we can identify the twofold aspects of this business transaction. One is cash, another one is capital. By observing these business transactions, you can also say, so the term of business we need to write here. No, we don't write here. Why? Because we are writing the books of accounts in business books only. So here the investing person is the owner. We need to write the owner's name. No, we should not write the owner's name in his book. So that is the reason we need to classify like this. We have identified these two aspects. One is cash, another one is capital. So look here, cash is the thing. It comes under a real account. Things are comes under a real account. A real account. Look here. Okay. So cash is the real account. As for the real account, what comes in, what goes out. Whether the cash has come or it has goes out. So by investing rupees 1 lakh by the owner into the business, he has started the business. It does mean that rupees 1 lakh has come into business. Means it comes in. Debit, what comes in. So here cash comes in. Cash comes in for starting business. So here we being the accountant of the business, here we do receive the cash from the owner for not for the purpose of us, for the purpose of business only. We have received the cash for the purpose of commencement of business only. Here we have received the cash from the owner. It does mean that cash comes in. So comes in means, as per this real account rule, debit what comes in means here we need to debit the cash. Here we need to debit the cash. Let us see the second one, that is capital. The term capital, instead of writing the owner's name, here we have written the term capital, or you can say here as per the American system, capital. Increase in capital, decrease in capital. So I'll discuss regarding all this while discussing about the American system. Let us see capital. Instead of writing owner's name, why? Because we should not write the owner's name in his business book. Now we have written as a capital. Capital which represents the owner means personal account. Here the owner is giver. Then the last thing, credit. Like this. So here I have given one example for debit and credit under English system. So with regards to one business transaction, that is for this business transaction, we can say it is the rough book entry. So in this rough book entry, in this business entry, we have identified twofold aspects. So one is cash, another one is capital. Cash comes in the real account, cash comes in, and as per the real account, it is the debit. So capital, instead of writing owner's name, that we have written the term capital. So which comes under personal account, owner is the giver and credit. By studying this example, dear students, so cash, debit the cash account, and credit the capital account. So this is the first example. This is the initial example. So for this one, debit and credit under English system. So further examples we will see in the next videos. So with this I would like to conclude, dear students. See you on next video.